Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about the $4,300 worth of option plays I've made, selling the options myself. We're going to talk about my Robinhood portfolio. We're going to talk about the different metrics I like to track on there. We're going to talk about my spreadsheets, and then we'll talk about the plays that I'm going to be doing for the week of the 15th, the 11th through the 15th. So as you guys know, on this channel, I borrow money, and what I like to do is make income with this borrowed money. In the past, I used to be investing in yield max funds, where they sell synthetic covered calls on positions, and they would pay you that premium back to you. I have pulled out of my Tesla position. I liquidated that position, and my only yield max position I have now is my AMZY position. And let's go to the Robinhood account. So currently my total portfolio value is $238,567. Over the last 3 months, I'm up $76,000, which is 47.2%. The majority of my positions are Tesla, and the borrowed money I have, which accounts to about $28,000, is this AMZY position. So I have 1,400 shares of that. I have a couple different covered call contracts that I'm selling. I'm selling 13 calls on AMZY for $20. And then on my Tesla position, if you watched my last video, I had a 280 call. I rolled that to 350, and I'll discuss the ins and outs of that later on when I get to the main portfolio spreadsheet. So you can see here, the gain's pretty good. Majority of my position is Tesla, and a lot of people would look at my portfolio and say I'm quite heavily invested in Tesla. That is correct. I drank the Kool-Aid, and I believe in the product that they're selling. If you're trying to build wealth rapidly, there's two real ways to do it. It's to open your own business or invest in a company that is doing great things. Tesla is that company. However, I am trying to divest away from that by selling options on the S&P 500. And doing so, I'm selling zero day to expiration options, which is helping me to build income, which therefore I can use as a income generation arm in this portfolio to buy more shares of different things. Okay, a couple different things that I like to track on here is my margin status. So my margin status is a low risk. I have $194,000 margin buffer. And my total amount of margin used right now is $28,000, which is not a lot. My max that I've used has been $60,000. And we'll talk about a couple different things on this page here. So margin status is low, and my interest rate is 5.8%. I just got an email saying that Robinhood will have the lowest interest rate out of any brokerage out there. Interactive Brokers seems to be the number one. It seems that Robinhood wants to be that number one. So look out for that the margin will be coming down. And carrying on to the other things I like to track on here. So I like to go to this investing tab, and again, just talk about different metrics here. $267,000. Again, margin used, which is only 10%, 10.64% of this portfolio, which is a minuscule amount. There are a lot of people who are using up to 50, 60, 70, 100% of their portfolio. However, if the majority of my position was in the S&P 500, I'd probably be a lot more comfortable using more margin. However, because I invest in such a volatile stock, the movements are so violent that you got to really account for using less margin. Finally, the numbers are looking good. So I'm up $61,000. It says my average cost is $267.41. My real cost basis is actually $181. I have switched brokerage accounts many, many times, and I finally landed on Robinhood, and my cost basis got lost in the transfers between different brokerages. I went to M1 Finance, then Fidelity, then eventually went back to Robinhood because the option trading is just second to none. The user interface is great. So if you're interested, I have a link down there in the description if you want to use Robinhood. If not, I don't care. Yield max. So my only yield max position is AMZY, 1,400 shares. I do want this to be called away to me on Friday so I can open up $28,000. And this $28,000 that opened up will help sell a cash secured put on Tesla, which I will discuss about my plays for the upcoming week. Continuing going on the metrics that I like to track. Again, margin used, margin maintenance. This has been the lowest margin maintenance this entire year, which is about $30,000 here. So all this stuff is looking pretty good. Let's look at the actual Tesla position. it says I have 900 shares of Tesla because of investing in YieldMax. A lot of people say that these funds have been pretty trash. I cannot complain about them because I became net positive on it. So after all the dust settled, after all the NAV erosion that everyone talked about, it still gave me a net positive $2,500. And then after you account for like taxes, it's $1,700. But if, when tracking your returns, you don't necessarily talk about tax, you just talk about the gain. And so $2,500, if you double that, that's almost a 10% return. With the tax returns, 5.4%, but $2,500, I did come back positive. So $3,500 to $2,500 extra in my account. That allowed me to purchase an extra 100 shares of Tesla without using my own money. This is great. And actually, if you watch my really, really old videos, I have acquired most of my Tesla from option investing than I have from putting my own W-2 income into this account or this portfolio or whatever. So it is pretty interesting. So again, total market value, $302,000, up $61,000, which is finally in the positive. If I wanted to borrow more money against this, it's a 30% margin. And the reason that we're doing so good in Tesla is because of this thing right here. So the last two quarters, Q1, Q2, Tesla underperformed on their earnings. This last earnings presentation, we demolished the operating margin. So one of the bear thesis is that Tesla cannot increase their operating income or operating margin because they're trying to constantly cut prices. However, Tesla has amazing factories and the machine that builds the machine. And what they have done is be able to bring costs down, producing all the vehicles, which ultimately brought the operating margin up, plus obviously raw materials going down and inflation cooling down a little bit. But they've proven that instead of having an operating margin that's decreasing over time, it's actually increasing. So this is a very interesting metric, which is why it skyrocketed. And then they had a robo-taxi event and they lined up what the next 2 years is going to look like. And so the next 6 months is not going to look super positive for Tesla. So I would see some sort of pullback to come. But after the next 6 months, we're going to start seeing some pretty drastic increases in operating income and revenue coming in. So just a couple thoughts on the Tesla position, but yeah, real cost base is $181 and it's finally in the positive. And the AMZ, I'm not going to really talk about because I make a video on its own talking about AMZ. And then I have a couple different covered call positions that I am selling. I am not buying calls. I'm selling them. So I'm selling 13 calls at $20 strike for AMZ. And then in my previous video, I had 800 shares of Tesla or 8 contracts selling at 280. I had to roll that to 350. And I'll talk about that more in the main portfolio spreadsheet. All right, going to the spreadsheet. So the first thing I want to talk about is the total income that I've made last week doing the 0 day to expiration wheel strategy on the S&P 500. So first 2 days, I was making dismal amounts of premium. And one of the things I want to stress about, I guess, what I've studied with option investing is you're trading the stock. Trading the stock comes first. The premium is just an added bonus. Like it incentivizes you to make the right choice. Obviously, if the premium's bigger, that's the easier choice to do. However, that's not always the right choice. So come Monday, my first position, I only made $1. My cost basis was 580. I think the S&P 500 was trading 573, and I really didn't want to sell it below my cost basis. That's not the whole goal of my position, or what I'm trying to do here. I've invested in YieldMax enough where I don't want to erode my NAV, and I will do everything I can to maintain it. So I just sold one for $1. The next day, this expired. The next day I sold one for $3. Market kind of recovered. And then it got me thinking. I decided, you know what? If I had a little bit more time, it could probably pay me some more premium. So what I did is I closed out this position for $1, made $2 of profit. And then I sold the 582 covered call on SPY for a premium of $332. And what ended up happening is the S&P 500 decided to skyrocket and had I rolled it, I could have made more income, but I was okay with the shares getting assigned, but rocketed all the way up to $5.99. But I got assigned at the $5.82. I probably could have squeezed out a little extra income plus getting a credit, but this is just not something what I wanted to do. So what I wanted to do was get my shares assigned, close out that margin position, so then I can go back to selling a cash secured put, and it wouldn't be accruing interest. So it would be saving me money in some regard. So, I got $332 premium. I got $200 of capital appreciation, which comes out to $532 minus the $1 I bought this contract back. So $531 worth of income that week. So on a monthly basis, that'd be $2,000, which is pretty good income for about $58,000. So no complaints there. Money's pretty good. And then again, the goal, I just want to make like an extra $5,000 a year doing this strategy. I mean, it seems to be that I'm making more than that. I'm on track to make more than that, but this is the goal here. And then for the most part, let's just talk about a couple things. You can see here, margin amount. I only have $28,000, margin maintenance, blah, blah, blah. We talked about that. Okay. So premium plus capital appreciation minus bought. So that's what this means. Total since I started in September is $886.35. Option premium here, capital appreciation. I'm trying to make about $20 a day, and there's 252 trading days. So if I had a net gain minus taxes and all this other stuff and fees, $611. If someone handed you $600 on the street for not necessarily doing that much work, sounds like a pretty good deal. Okay, moving along. Let's talk about the main portfolio here. So we've had to make some moves in this position. We had to make some decisions and choices. So this week, I was selling a 255 covered call on Tesla because I got assigned the 255 on Tesla somewhere over here. 250 got assigned that, and I was selling 255. My plan was I was going to make an easy $5 per 100 shares, $500 plus this $118 in premium would give me $618. However, that's not the case. Tesla decided to hit the moon. So what I did is I bought this 255 back, and what I decided to do is I wanted to sell a 350 call on it. So originally I had, let's go here, eight contracts on the 280. It was going to expire in March. However, it blew past this strike price, and I decided, you know what? I'm willing to push it further out to unlock a little bit more gain. I'll talk about that here in just a second. So it cost me $51,000 to roll that position. And I also rolled this one for $6,000. So like the total comes out to about $58,000 to roll it. However, I rolled it for the 350 and I was paid $6,875 per contract. So me rolling this position, I netted a credit of $3,825, and I unlocked $63,000 more worth of gain. So let me explain. So, and I had these shares assigned to me at 280. I would obviously make a decent profit. However, it would take a massive tax hit, and then there's still much more room for Tesla to keep going up. So if I left it here, I would have just made my whatever couple $1,000s. However, by rolling the position for a credit, I switched from the 280 up to the 350. So if you do the math between the two, and I'm calling this 255, 280, just to make the math simple. So 280 to 350, that's $70 a share. Each contract is 100 shares. That is $7,000 per contract times 9 contracts. That's $63,000. So not only did I roll this position, so again, this 51,000 plus this minus this came out for net credit of $3,825, and I have the potential to make an extra $63,000 more. That's the power of option investing, as well as if you're investing in the right thing. So I unlocked more income just by rolling that position, but for the next 13 months, there's not going to be that much to report on. I'll still be keeping track of it. And the only action that we'll see with these 9 contracts is if the stock market decides to tank, we could possibly buy that back in for a decent price, but I'm not going to be buying back in here. And I guess moving forward, one of the plans will be is when we get closer to the expiration date, sometime in October, depending what the share price is, I might have to roll it again. So maybe 2 or 3 months out, I will have to roll it and, hopefully do it for a credit, and then as well as unlocking even more gain. All right, we talked about all our different things. Let's talk about the plays that I want to do for this week. The first play that I want to do for, tomorrow's the 11th, for the week of the 11th is a Tesla play. I want to sell a cash secured put on Tesla, and I want to sell, I'm looking for about a 20 delta here. So whatever is the 433, and there we go, 21 delta. If Tesla's going to keep going up, I would be willing to get assigned at 293 for $433. So this is what it's looking to be like for the Tesla play tomorrow. So that's going to put me at about $30,000 of option collateral. And then the next thing will be my 0-day to expiration strategy. So what I want to do is I'm looking to make about 20 bucks on this play. So whatever this one, so chance of profit 90%, delta about 10. As long as I'm making about 20 bucks a day, I'm going to be hitting my goal. So if the share price, it's $5.99, drops down to here, which is about $6 to $7, I'd be willing to buy in it here, get my 20 bucks, and then hopefully, if I do get it assigned, just sell at the money or a little bit above the money, about a 20 delta as well. Capture some price appreciation as well as a decent premium. So those are the plays I'm looking to do this week. But that's it for the video. Side note, check my bro's channel, Kiddo's Advanced Borrowing Strategies. His channel's name is Project Premium Harvest. He's been bumping up his subscribers, so definitely take a look over there. But besides that, I hope you all have a good one. Take care. Peace.